On this video, Sunday evening, 5th of August 2012, Chicago. It's about 7:06 p.m. It's actually Monday morning here in Sydney, Australia. I hope you had a good weekend. Enjoyed watching some of the athletics on the Olympics. And just a quick video with just a little bit kind of recap of some of these charts. Overall, nothing has kind of changed in terms of the commitment of traders, data, and so on. And they're all kind of bearish divergence signals in the background there, kind of showing overall weakness in the market. However, we're in an uptrend and we're close to some kind of important breakout levels and a whole bunch of risk on risk off charts. So I'll just kind of go through those. This is Better X trend to start with, and here we go. Better X trend's been following this kind of trend up and now sits at 1353, kind of down here on this stop. The last time we had exhaustion selling into this support level here, we bounced pretty strongly from there, and then this was Thursday's activity where we had the ECB announcement and we kind of bounced off that bottom trend line and bottom kind of trailing stop line. We closed pretty strong on that day and we kind of rallied from there. In terms of better trend line, you can see we've been going through this whole series of three kind of congestion patterns. Here's the first one here, broke to the upside and then tried to break to the downside, congested again, broke to the upside and the downside. I mean, this is why this market's been incredibly frustrating, is that we're kind of going through this kind of process where seemingly it was kind of a complex correction, but now with this last move, and you can see how strong this was Thursday's kind of close was on that activity, and we've kind of rocketed through the upper trend line, and so we're starting to break into uptrends on these charts. Better sine wave, same thing, that we've been having this kind of cyclical pattern here, and now on the daily charts here you can see we're breaking through this resistance level. And on the risk on risk off charts, we've got a similar pattern. On the daily charts, what we've seen is the last 2 days, Thursdays and Friday, have been extremely high range, high trade size, a lot of kind of professional positioning kind of going on, and we're getting close to kind of breakout levels. So this is the Euro chart here on a daily basis. So we had this strong down day on Thursday, which was high volume professional kind of trading going on, and then we just stopped at 122. We tried to break through here but didn't get there. Friday we kind of rocketed through there. We're through a resistance line here, and we've got all this exhaustion selling, bullish divergence, flush patterns, bullish divergence right close to the zero lines here, and we're breaking through this resistance line. So it could be that the euro is going to break into an uptrend now. Copper, we've been, again, Thursday's activity was a big professional bar, and because that we're starting to break the highs of that. I mean, on these charts we're in a little bit of congestion at the moment, so we need just kind of confirmation that we're breaking through this, but potentially this low is holding and we're kind of breaking there. We've got cyclical support kind of going on, and we've had all our exhaustion selling, flush patterns and so on, and that's almost like a test down. The professionals kind of buying that bottom, and then we kind of rocket forward. So looking for a break above 340, 345, something like that. Then we go crude. Crude's had kind of the strongest pattern because we broke through this resistance line, which was a pullback and a downtrend, and now we've kind of bounced off that resistance, become support. It's actually put in a little pullback level here, right there, and we're starting to break there, so kind of breaking up to 94s. So again, exhaustion selling, bullish divergence, and maybe that's enough in terms of the downside, and we have a little pop to the upside. Silver, pullback to end of trend, bullish divergence kind of comes in, and this is Wednesday, Thursday, and then Friday's activity here. All these blue professional bars kind of coming in, maybe buying that dip. So as soon as we break above that resistance level up here, 28, 28.5 kind of level on silver, we'll get into an uptrend here. Gold, similar type thing, where the kind of resistance levels just sitting under 1650, where we've had these flush patterns kind of made. So if we get a break above there, we'll be into an uptrend. So that's on the daily charts, and then we've got the flip side in terms of the risk off chart. So here's 30-year bonds. So these are these two kind of big professional bars where we're just in the zone here. Another one, we're in the zone. So we've got this congestion zone here where the professionals have been positioning themselves, and it could be that we're breaking the lows of that into a downtrend on the bond market. So rates kind of going up. So we've had pullback to end of trend, Rambo patterns kind of testing into here with bearish divergence kind of coming in, and we break below the lows of those blue professional bars, and we're into a downtrend here. And then here's dollar index, which is the mirror image of the euro. So we've got all these flush patterns kind of going on here. Here are all these blue professional bars over the last week and a bit. So and the high of that first one's not been taken out. The high of this one on Thursday has not been taken out, and we have a high probability that we kind of break through the lows here, which means kind of dollar index down, and the risk on currencies going up, of which the Aussie dollar is incredibly strong at the moment. So, and then if you look at the weekly charts, we've got kind of support levels kind of supporting each of these kind of moves for a rally over the next couple of weeks, which is here's the weekly chart of the euro. End of trends kind of come in, exhaustion, selling, bullish divergence. We're back above the weekly support level here. Copper, it's kind of held, all these blue professional bars kind of coming in here, a little bit of a test down, bullish divergence close to the zero line, so the support level appears to be holding right now. And then here's crude. Crude, we didn't have a nice little kind of neat pattern with exhaustion, selling, blue professional bars kind of down here. We've just kind of bounced off that support level there. Silver, we're at the support level here, if you like, so potentially kind of bouncing back up to the next place we find resistance. Gold is a little bit different. We're through the support level on gold, just hanging around this level, but if all the risk on charts start to kind of rally, gold will go with it, so we'll kind of potentially kind of go up. It's the weaker though of the two in terms of silver and gold. And then again, looking at the risk off charts, this is the 10-year here, where we on the weekly chart pull back to end of trend. We've had exhaustion buying and this little Rambo patterns over this sequence over those 2 or 3 weeks here into those new highs. Couldn't break through, kind of starting to lose energy here. This is dollar index. I mean, we didn't make it far in terms of this rally on dollar index. We're kind of rolling over here with the weekly support resistance level, kind of holding, bearish divergence and so on. And this is 30-year bonds, so again, exhaustion buying. We've got a little bit of amateur up bar resistance kind of holding on those weekly charts and so on. So I suppose that just to say, go with the flow. I don't like the rally. I don't think the fundamentals kind of support it. But just a final kind of thought, just mulling around some activities. I mean, we know that the Eurozone is kind of extremely stressed at the moment. We've got Greece in a depression. We've got Spain approaching a depression. We've got unbelievably high unemployment rates. We've got unbelievably high, kind of leverage on the banks and government debt. And we've got an ECB that is, struggling to get consensus as to what it should do. When we had the subprime crisis in the US in 2008, all the money rushed back into the US in order to repatriate funds and build up balance sheets that were weakening. And so the financial institutions, the hedge funds, people that were highly leveraged had to basically repatriate funds. We had strong US dollar and we had strong bonds, US bond market, because that money flowed back into short-term kind of holding kind of vehicles. Now, if the same thing is happening in Europe, we've always kind of assumed that we've kind of got risk on, risk off, and that euro is kind of a risk on country and so on. But if the eurozone is imploding in terms of the financial institutions really being stressed, in terms of the hedge funds and the highly leveraged players in the eurozone being extremely stressed, I mean, why wouldn't we have repatriation of funds back into the eurozone and into the eurozone, the safer bonds at least? And we've certainly seen in terms of the yields on the German bonds and the Swiss bonds are basically at zero, so the money's flowing back into those safe instruments. But why wouldn't we have a pop in the euro? Because we're getting that repatriation of funds back into the eurozone, similar to what we had in the US with the subprime crisis. So this kind of risk on, risk off mantra with the euro as a currency kind of representing risk on, it going up at this point might not represent that the players are willing to take risk and invest in kind of risky assets. It might just be a repatriation of funds by highly leveraged players in the eurozone back into the euro in order to support their balance sheet. So just a thought there. Anyway, looking forward to this week's trade. I hope you traded well last week. We finally got the ECB and the FOMC announcements kind of out of the way, so a little bit of kind of clear water kind of going forward in order to do some trading. So looking forward to next week.